Happy Friday, traders. It's 8:02 a.m. Chicago time on Friday, the 5th of March, 2021. It is non-farm payroll slash unemployment day. Probably one of the more active unemployment days I've seen in a while. Quite the blowout number and reaction. This is episode number 1950. We're at the mid-century mark here with this episode. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Please give me a mic check if you have a chance. Just let me know if it's too loud, too low, too something, or if it's perfecto. Let's move on to our sheet, a pre-market summary sheet from Convergent Trading provided by convergenttrading.com. You can follow on Twitter at twitter.com/conv trading. It's in the URL in front of you. The market went from a neutral posture right before the release. The release caused the market to drop in the indices, and then there was an ensuing rally. So the number that came out is at 379,000. The first month of Biden's administration here, 379,000 versus an estimated 198,000. Prior's 166. Previous revised to 166 from 49,000. So this number, of course, creates an argument or a discord between those who are concerned about yield and those who are concerned about growth and the economy recovering. Those things are interrelated, but traders and investors vote with their dollars. So back and forth, back and forth. Really, in my opinion, and again, this is not suitable for all investors. In my opinion, really decent opportunities today. I haven't seen non-farm payroll has been a non-event for so long. You kind of get used to it. The unemployment rate dropped to 6.2% versus 6.3%. And that's the big news. The other thing that's pushing us that is on deck is, of course, the Senate debates begin today on the $1.9 trillion stimulus package. There's been some negotiation, and they've cut down on the cutoff point for those who qualify to get checks to move this thing forward. Of course, the market is watching the U.S. bond in 10-year yields. These have been moving quite a bit. The 10-year futures and the bonds dropping on the release. So this, given the outcome, the expectation is that the Fed is not likely to make a move to hold yield down or to purchase on the long end of the curve. So that's where we are. Currently, looking at the leaderboard or the quote board, oil is way up on a Goldman Sachs report projecting price to be around $75. It's trading at 65.45 in the April contract, up $1.62 or 2.54%. Currently, the Russell's the leader, the small caps really racing up 1.79%, trading up 38.3. The S&P 500 gapping up with a 38 and a quarter point gain on yesterday's settlement, or 1%. The Dow is up 0.93. The Nasdaq's up 0.99, 117 points. And then the dollar is up, and that's, of course, in response to yields rising, more demand for the dollar. And the Euro stocks 50 are up 3 points, almost unchanged. The DAX is slightly down, unchanged. Silver's off again. Silver's losing more ground, off 1% or trading at $25.20.5, down 25.5 cents. Gold is below the $1,700 mark. We moved from 1,800 to 1,700. right quick with gold. It just where was it? When was it? When it was at 1800? Let's see. It dropped below 1800 uh just a week ago, a week and a half ago, on February 25th, it looks like, is when gold snuck its way below 1800. And in just that short a time, it has fallen below 1700 at 1693.6. This is quite remarkable. So that's the lay of the land. Um, the dollar getting stronger means the yen, the cable, and the euro falling. The Swiss franc, it's holding its own. Oil hits a 14-month high, as it says up here, and the only thing that's left for the day is Fed's Bostic speech. The market may or may not be paying attention there. I don't remember if Bostic is a voting member this year or not. The volume, of course, the overnight volume shown here is incorrect. It's not 4,780. That's just a small typo. Currently, it's 528,000, which is approximately four times, almost four times, about 3.5 times what we would expect usually, and about twice what we've gotten recently. 1.5 to twice of what we've gotten recently. The bottom line is, it's there's quite a bit of activity, and we expect that to carry into the day session now. Range was 65.25, but since this was released, I'm going to compute it real quick. Since this was released, the range has expanded a fair amount, 72.75 points. The profile's multi-distribution at this point. It's no longer balanced. Things have changed quite quickly in the last 15, 20 minutes. So that's where we stand today. Expecting the open to be quite busy. And again, pretty good rotations, lots and lots and lots of rotations this morning since the release, and actually since a little bit before the release as well. So that's where we stand. I'm going to take this opportunity real quick to remind everyone it is non-farm payroll Friday. It is that time of the month where we put up and look around us and see who's there. If you can take a moment to just type in what city, state slash province, if that's applicable in your location, what city, state slash province and country you are hailing in from. Generally, we get about 630 to 650 viewers live on YouTube. We generally get about 7 to 800 on Periscope Live, and generally we end up around 2,100 to 2,200 views because people watch this later. So just type it in, punch it in, let us know. It's a big group. And I'm grateful for that. I'm thankful for that. Maybe you can kind of look right, look left, and see if you can locate someone nearby. I do not suggest you put up your email or phone number or anything like that, but if you wish to be connected, you can shoot an email. If you notice someone, if you notice each other, I'm more than happy to try to help out. You can shoot an email over at futurestrader71.com/contact and just provide the other person's name, and hopefully the other person does the same, and I'll help you guys exchange emails. It's my whole drive for the last several years has been to connect people. This is how we make an impact. We bring people together instead of parting people and being divisive and polarizing people. So I'm hoping to continue to fulfill that mission. That's what Convergence about, and that's what we're here for. So enough of that. Let's take a look at what was expected yesterday. Yesterday, the primary expectation is a pullback. Expected the market to extend the impulse down, extend it by a little bit, come back in and go and retest that 3830 to 3840 area on scenario one. The secondary was looking for it to respond immediately, expected it to have a hard time at 38.30. And I marked here with this check mark that the next area up is 40, and the next area up beyond that is that 60 area. The 45 is where we topped out. We started an impulse and we pushed lower, the key target being 77. What the market did is it actually pushed way down into 37.20. Of course, there's no way for me to predict that, but the second scenario was pretty much on point. That's what I was monitoring for. The This chart is going to look kind of funky. It's a six tick Renko. It's going to look kind of funky because there are a lot of rotations here, but very simply, we opened back up and we went to that 30. We pushed to 35 and we got our impulse and we got our continuation, but the continuation halted in the mid of the gap, the mid of the February 1 gap, before we had a counter impulse up. This looked like scenario 2 was dead in the water when this happened. And it just looked like scenario 1 was going to be in play. We extend above the IB by a little bit. We take 35 up to 43 and a quarter. Remember, the 45 area, 45, 48 area is a balance area from about 6 weeks ago or so, and it stalled out in there. It held, and then it broke through below the IB, and now we're looking pretty good for a drop, and it starts to drop off. I'm in a webinar at this point, so I didn't participate in this, but this was a pretty orderly sell-off, in my opinion. We did leave behind this beautiful zipper. Look at that thing. That is just a great little structure there. There's a battle here, which leaves us with a weak low, right in the 37.20 area. So this is important to pay attention to. We end up rotating up. We don't get back into the IB, and we consolidate and close at 37.69 with a pretty well distributed lower distribution. So we have a double distribution profile. We have a cutoff right at mid and VWAP at 37.82. There was a single print at 37.8750, which remains from this initial low here. So this area is where we were before the non-farm payrolls, about 7 or 8 minutes before the non-farm payroll release at 7:30 Central. This is where we were battling in the single print zone, and then we dropped off from there. The SOC, the scene of the crime or trigger, where the non-farm payroll came in, is around 76.50, something like that. 76.50. It dropped to 60, set up actually a really decent scalp there for a rotation back to the SOC at 75, and it got to 76, and then it pushed through, and now, of course, we extended higher. So we are pushing a lot higher in actually, I said that it was gapping up. It's the gap up was the internal gap. We're opening above the prior day's close. We're still trading inside of yesterday's range. Yesterday's range high is up here at 38.42-ish. The exact high of yesterday, 38.42 and a quarter. Does that make sense? So as the market was selling off yesterday, guess what? We have this delta just rising and rising and rising. So once it got down here, the buyers were more aggressive than the sellers in lifting the offer, and we ended up rotating the market up and finishing with a strong positive delta, setting up a high probability reversal here, although it's not something I can act on, but because it requires me to, it's more of a swingish idea. But that's what we have. This is really important to note that the delta was lifting yesterday, and now we come into today, and here's what today looks like. Today we have, the market sold off yesterday. pulled back, stayed below the mid, as I said, two distributions in the trading range yesterday. And then we spent most of the evening of the overnight session in the lower distribution in what was a balance profile. And then we started lifting. We sold off on the non farm payroll release, again, a blowout unemployment number. And then we are rallying, 38.1450 being the overnight high, pushing us back to where we were yesterday, where we opened yesterday in the RTH session. So that's where we stand. Note, we're in the upper distribution. Note, we are above the key low volume node. Okay, note that down into 76 or so, 77, 80. As long as we remain up here, this is likely to continue to gyrate in here on the open and potentially giving us a reversal up. You can see on the tape this morning, even though it's pre-market, you could see that lifters were really active. You could see the size lifting. This is a consolidated tape, time and sales uh, tape here. It brings orders back. It recombines orders back using MBO data. It's not reconstructed. It's not a guess. It's accurate, and you could see that there's quite a bit of lifting here, and it's pretty consistent. So this is how the market is responding to that release, and this is the information that we have. We are in the upper distribution. I like double distribution profiles because they give us a very clear cutoff point, to when the distribution has the upper or lower distribution has given in, and what to expect next when it does. So that's that. Again, delta is positive, pretty decent positive for this time of day. And so the buyers are doing a good job lifting. A general overview here. A general overview. Looking at the big picture, we have a peak day. This looked like a reversal day that failed. We had an inside day. We broke the inside day down, lower time frame. So we have triggered one time framing up or down, one time framing down. We took out the 85. Remember when we were up here and up here, I talked about the 37.85 being key. Down here, and you can see the market kind of spurted through as it did yesterday. It just blew right through. Once it got through that, it made the low at 37.88 yesterday morning. That was the initial bounce low. That was the gap mid. Then it came all the way back up. And once it gave up that 85, we had that impulse down. We had that fast move down, and that's what's expected. Putting 36.94, about 100 points down, putting 36.94 in range of play. The overnight low was 37.31. We made some headway down in there. So yesterday's low 37.20, and we are trading on the upper end of yesterday's distribution. So pay attention to this area right in here, 38.38, and yesterday's high at 38.42. These are big resistance areas. We are trading against 38.13 currently, and that's where things stand. Okay, I know that's a lot to digest. Really good range yesterday, really good volume, and this looks like rejection, but it did leave a weak low, which actually I forgot to note on my master levels. I need to correct that. So that's that. Let's move into what's expected for today and wrap up. By the way, in case you didn't see because you just arrived, please take a moment and tell us where you are, where you're located, what city, state/province, if applicable, and country you're in. If you notice someone else, if you go up and down the live chat and notice someone else in the area, you can send an email to you can submit an email at futurestrader71.com/contact, and I'll do my best or get someone to try to connect you if the other person responds. So please make sure to do that. We are a community at the end of the day. We are a trading wolf pack. So, what do we have here for today? Lots of people from Toronto. Lots of people. You should be able to find a whole meetup of people who are here from Toronto, actually. Toronto and the Toronto Greater Toronto area in general. Um, what are we expecting on the primary scenario? The primary scenario, we are again. I'm going to note this very clearly. We are above the key LVN from yesterday. We are in the upper distribution. The market is expected to be responsive on the open. Pull back a hair. There's quite a bit going on uh, in that 38, 37, 87 area. There's quite a bit going on there. I'm expecting it to pull back to that zone, to this area right here, 37, 87, 88. Expecting a pullback to there, consolidation on the open, and then I'm looking for it to continue to re-engage on the buy side and push. After all, the numbers that came out show that the labor market is strengthening. That has huge knock-on effects, positive effects for the economy. More employment, more income, more taxes, more spending, more earnings, more better stock performance. Right. Expecting it to challenge to push up, and I'm expecting this thing to run out of steam as it pushes into the 38-30 area and to consolidate up here for a while until the close, and we may see a spurt at the close to the upside. Secondary scenario, we have an internal gap and we respond early. Secondary scenario, it opens, squeezes higher, is unable, comes back. We have our impulse down and then starts to consolidate in that 37, 87 area, 88, breaks through the key low volume node between the two distributions and starts to work itself back to yesterday's point of control. Yesterday's point of control is 37.69 and a quarter, expecting it to flutter around in here and then consolidate to close on top of this MC point of control at 94. 94 is really important in this area, 37.94. And this is 38, oof, 38, 30 up here to 45. Okay. So that's scenario two. That's what we're looking for. Not much more expected on the calendar, so don't be too shocked if you notice that it's slowed down quite a bit after the open, an hour in or so. It is non-farm payroll Friday, and there's a tendency to do that. But there's a lot of volume, and there are a lot of rotations. There's a lot of activity, and I expect that to carry over into the session. Good luck today. Hopefully you gained something today, and hopefully you found a new trading buddy or trading friend in the live chat stream. Good luck. Take care.